Hi dear students, today we are discussing the topic weighted average cost of capital. Okay, weighted average cost, it is also called the composite cost of capital, just average cost of capital, etc. Okay, weighted average cost of capital is calculated by considering the cost of all the sources. Okay, it is also called composite cost, also called overall cost. Another name is just average cost, etc. The relevance of weighted average cost of capital is that weighted average cost of capital is used as a discounting factor for investment decisions or capital budgeting. In capital budgeting, when we calculated the present value factors, we consider the weighted average cost for calculating the present, for identifying the present value factor and calculating PV, present values. So that is the relevance of weighted average cost of capital. So it is taken as a hurdle rate for capital budgeting proposals. Okay, then we will assign weight to each sources. So the weight assigned may be book value or the market value. Then when we consider the cost, we have to consider the after tax cost of debt. In case of debt capital, we have considered cost of debt before tax, cost of debt after tax. Here we have to consider the after tax cost of debt capital. Okay, simple equation is KW is equal to sigma XW divided by sigma W. That is the equation for weighted average cost. Okay, let us examine how to calculate weighted average cost of capital. Okay, this is an example. Following is the capital structure and after tax cost. Calculate weighted average cost. We have given different sources: debt capital, amount, proportion, and after tax cost is given debt, preference, equity, retained earnings. There are these four sources of capital for a company. Amounts are given, proportions are given. If proportions are not given, then we have to calculate the proportion based on the total amount. Okay, then after tax cost is given. Then how to calculate? It is calculated, we have to provide these columns. Okay, sources, we have to take different sources of capital. Then proportions, proportion is the weight, W is proportion. Here it is wrongly given as X and after tax cost is given as W, just it is opposite. Proportion is given as the weightage, it is the weight, and also after tax cost is taken as the X. Okay, so the debt capital proportion is 25, preference proportion is 20, equity 30, and retained earnings 20. After tax cost, that is X, is 5%, 10%, 12%, and 11%. Okay, then we have to provide an additional column for answer, that is XW. XW is proportion into cost. Okay, XW is 5% into 25%. 25% of 5% is 1.25%. Okay, 10% of 20% is 2%. 12% of 30% is 3.6%. Then 11% of 25%, 2.75. Okay, then we have to total two columns. One is W column, the proportion column. Sigma W will be always 100. Okay, so sigma W is 100% is taken as 1. Okay, and XW, sigma XW is 9.60. Okay, so weighted average cost of capital is sigma XW divided by sigma W, that is 9.60 divided by 1. Actually, there is no need for this division. Simply take the sigma XW as weighted average cost, because the answer or the total of proportion always will be 1. So sigma XW, that is the weighted average cost of capital, here is 9.60%. Okay, we are going through another example. Following is the capital structure and after tax cost. Calculate weighted average cost. Here there are different sources. There are four sources: debt, preference, equity, and retained earnings. amount 20, 30, 40 and 10. Okay, then after tax cost is given 12%, 10%, then 8%, 10%. Calculate weighted average cost of capital. How to calculate? We have to provide at least 3 columns, that is sources, proportion, after tax, and also we have to provide additional one more column, XW, that means proportion into cost. Okay, then proportion column is totaled as sigma W, cost column is taken as X, then X into W, XW means the proportion into cost. Simply if we are getting a problem like this, you draw two more columns, that is proportion column and XW column, multiply X with W, it will give XW, then total the XW, the total of XW will be taken as weighted average cost, because the total of sigma W will be always 1. Okay, I think you have understood the problem. So friends, you solve the problem and the final answer sigma XW, that is the weighted average cost of capital, I expect it as a comment in the Google Classroom. Okay, I think you have understood. If there is any queries, please text me. Okay, thank you very much.